Raoul Pal talked about the price hurdles of Bitcoin. He also predicted that the Bitcoin price will soon hit 100k. Talking about the market of Bitcoin and its economical advantages, Raoul Pal said that it gives us the confidence. It's not just like Wall Street bets, where it's basically a bunch of retail investors trying to maintain price action. Here we have actually got a broadening, diversifying, deepening market which looks perfect technically, has a good roadmap, and has good seasonality. It's like if you can't find conviction here, you are never going to find it. Because this is like the perfect storm, positive storm for Bitcoin institution, and Bitcoin goes up. So let's say it's a 5% way in your portfolio. Now if the Bitcoin triples, it's now 15% weightage in your portfolio. You are now overweighted, and that's going to bring volatility down because right now there are no sellers. Raul says that if anybody comes into the market, the price gaps up. Then there's a bit of retail leverage that gets stopped out in small sales because it's quite illiquid at the marginal price. But what's going to happen is these institutions going to be buying and selling on a monthly and quarterly basis. They'll be buying into dips, they'll be selling into rallies to keep their allocation in line. And what's going to happen is Bitcoin is going to go from the 70 volt beast to 60 volts, 50 volt to 40 volt. And if you get a world where Bitcoin is the reserve asset, then it's going to be 5 volt. So it's preferable to use a regression line and use the trend to the log scale because it says somewhere between plan B and 400,000. But it could hyperextend to get as high as it did from the trend in 2013, which will give us 1 million. So it's skewed slightly higher than people expect. It might not get to 1 million, but we have got institutions coming in. Who knows how this dynamic changes? So it's interesting. Raul says that the other thing for people to bear in mind is that there's a couple of price hurdles that are coming up that people haven't thought through. The first one is Coinbase IPO. So if you are an institution who wants to buy Bitcoin and you have got to go through all this rigmarole to try and get it signed off, and Coinbase IPO comes out and it's a 50 to 60 billion dollar company and you can stick a few billion in, it's a good enough proxy for a while. So chances that's going to take out a lot of demand from institutions in the short term. It's not a long term thing, but it will absorb quite a lot of the demand. The next big thing after that is 100,000 is going to be an issue because a lot of people got in around 10. A lot of people had made 10 times their money, and 100,000 is a round number, and people are thinking to take half of their chips off the table. So we might see a longer correction, and there are signs that we can go up to 60,000 into April according to Raul. That works perfectly for the Coinbase IPO. Everything calms down because institutional buyers stop piling into Bitcoin futures. They buy Bitcoin base first because they can justify easily. It's just equity, and then the next run take us to 100,000 into June, in which case this could be a lot of profit taking. We can already see the community starting to think it through. It started with stacking sets, but it feels a bit awkward in a bit of a forced narrative. We kind of have to explain to people that the price is not the headline price. You don't have to buy one of these. We just have to explain that to the average people. But Raul reminds that don't forget, retail is handing the baton on to institutions here. So retail investors will find it hard, and we all want retail participation, not because it drives the prices, but because we truly believe it's the best thing for them to do, to have a chance for their futures, to be able to pay off student loans or whatever it may be. So we all passionately believe it has a real place in people's personal portfolios, whoever they are and however little money they have got. But the institutions will continue to drive that whole thing higher because they understand that price is just a number. It's just a number. We just have to get better as community. The reason you might have different opinions about it because you are thinking as an individual investor about it. You are in charge of your mom's pension plan and everybody like her. Now Raul says that what you then have to do is justify that it's safe and it's secured properly and you have done all your due diligence, and that's a lot of work because it can't be yellow. It's not Michael Saylor. You don't own the company basically or have all the voting rights. You have to appease millions of policyholders. So you have got a massive legal liability. You have to do all the work. Raul points that insurance companies don't sell stuff. What they do is they build a portfolio and then draw down as necessary. So that would be just a weighted amount. Again, people really misunderstand what people do here. An insurance company manages a big pool of assets and then you make a claim because you crashed your car. So it comes out of the pool. They are not going to sell their German funds for that. They have an asset location. So basically what they do is just release some of the cash and they have cash buffers for that. It's not like that changes a lot. It's going to be the guy who runs the asset allocator, the CIO, making the decision of do we tweak our Bitcoin position by 15 basis points and reduce our German funds by 10 base points, regardless of all the claims being made or whatever it may be, if it's life insurance or anything else. Again, it doesn't work in that way, super important. Raul says that is very important because those who own massive treasury style cash balances and long-term liabilities are insurance companies and assurance companies. This is exactly the kind of asset that they need. It's almost perfect for them because they have these long-term cash flows and they sit on tons of bonds, tons of different currency exposures, and they need to model out the risk of that. And Bitcoin works very well. There are not many instruments in the kind of money market side of things that looks anything like this. Because of bonds, you are going to get no real capital appreciation. You don't get any interest. So how do you manage massive publish? And Bitcoin becomes interesting for them. Raul has to say that it's just a start. Once we start to see more of these, the whole insurance industry is going to start putting this on their balance sheet, which makes total sense. The idea behind negative interest rates is to incentivize capital out of the banking system and savings into the economy to stimulate the economy. It's usually a sign of low economic growth or falling inflation. So it's an idea of stimulating demand and stopping capital getting poured into the banks. We have got stuff like N2 falling, so the velocity of money starts to fall. It means the money is getting hoarded. So the idea behind negative interest rates is that. Also, it has a nice side effect is the fact that everybody is so in debt. It means governments can fund themselves at zero or negative. In fact, you pay them for the privilege. But that's not that weird. And this is actually, if you buy gold, you pay a cost. It has a negative carry because you have to pay for storage. So guys, this is the end of the video. Tell me in the comment section below, how do you think that Bitcoin will tackle its price hurdles and when? I'll see you in my next video. Till then, have a nice day.